Netflix recently reported their earnings for Q1 2022. I wasn't really planning on doing another video about Netflix quite so soon. The last regular video I posted was on Netflix, and it was on the Sunday before the earnings were announced. And if you haven't watched that video, you might get a chuckle out of going back and seeing what I said before the earnings call and what I decided to do. I really figured that in all likelihood, the stock price might fade a little bit more or just trade in a range. And I really didn't anticipate having a reason to do another video about Netflix at this point. Man, was I wrong. I'm sure by now you know that the stock price has literally fallen off a cliff. It dropped by 39% the day after earnings. Bill Ackman sold out of his position very publicly, very famously, and the stock prices continued to drop. Going back to their all-time highs, at this point, the stock price has fallen 72%. Obviously, it's no fun to make these kind of videos as a shareholder or as a YouTuber. I figured that there was about a 1 in 5 chance that the stock price would go lower, but I really didn't expect anything like this. I feel it's important for people on YouTube to be open and honest about the mistakes they make, and I'm just gonna say I blew it on this one. In the last video, I was not trying to influence anyone to buy Netflix stock before the earnings. I was simply going through the process and sharing my thoughts about what I think about on every earnings situation as it comes along. But if you made the choice to buy Netflix before earnings because of my video, I would really feel awful about that. The good thing, I guess, is not that many people actually watched the video before the earnings call. So hopefully that didn't happen to any of you. Obviously, I made the video, I said what I said, and just in case anyone out there wonders, I did buy the shares. Today, my Netflix position is down a total of 55%. But let's talk today about the earnings call and what it really means for Netflix. We've had about a week for people to write different articles, for people to be interviewed, for people to respond, and for people to tweet about different ideas, different things that they think Netflix should do. I've heard all different kinds of analysis where people are identifying different kinds of problems and offering different solutions. I've heard people talk about that now that the growth is over and it's now a value stock, Netflix should start paying a dividend and they should start buybacks. And I was reading about people who thought that they should buy Spotify and they should get into sports and they should get rid of their gaming, or maybe they should increase their gaming. And then now today I saw that there was an announcement that they are looking to buy into an anime company. While all of these are interesting ideas, and I think leadership should hear all kinds of ideas like that because some of them may be fantastic, I don't think that these get to the root of the problem. When I first started to make this video, I thought there were multiple problems, but I believe it really comes down to one. I believe that there are different actions that Netflix can and should take, and that they should do it quickly rather than slowly. But I think the root of the problem really comes down to one thing that I'll get to by the end of the video. We're going to take a moment now. I want to share with you a clip of CEO Reed Hastings as he's talking at the beginning of the earnings call.
Yeah, Doug, I mean, I think our views are a little different because our numbers are a little different. If we had made our 2.5 million guidance, I think that was consistent with our thesis, and the lower acquisition really forced us to kind of tease apart what's going on. And as we put in the letter, COVID created a lot of noise and how to read the situation, boosted us a lot in 2020. And then in 2021, I think we, thoughtfully said it was mostly pull forward, which was the logical conclusion. But now coming into 2022, that, doesn't really hold. So then pushing into it, we realized, with all of the account sharing, which we've always had, that's not a new thing. But when you add that up together, we're getting pretty high market penetration. And that combined with the competition is really, what we think is driving the lower acquisition and lower growth. So on the two parts, we're working on how to monetize sharing. We've been thinking about that for a couple of years, but when we were growing fast, it wasn't the high priority to work on. And now we're working super hard on it.
All right, so the first major thing to talk about is the account sharing and how that's affecting subscriber growth. Netflix has trained investors for years to care about subscriber growth, and it is a great model. And we love to see that subscriber growth just grow by double-digit percentages quarter after quarter after quarter. And it's gotten to the point where investors are trained to not even pay attention to the money. Just look at the growth of the users. That makes sense because for a lot of these companies, for Netflix for a long time, they weren't profitable. And so it was only subscriber growth that you could really look to indicate how the company was really growing and progressing. And while I like to see subscriber growth, did anyone even notice that Netflix is actually making more money? No one even cares. Did anyone even notice that they beat the earnings per share expectations by 20%? Nope, nobody cares because they lost subscribers and they're projecting to lose 2 million more next quarter. Now everyone knows that there's account sharing with Netflix. They talk about it openly on the earnings call. A lot of different companies have gone down this path. You may share an Amazon Prime account with different family members scattered around the city. You may share a cell phone data plan with family members that are in other parts of the country. You may share Netflix account with people all over the place. And if you're wondering why they do this, each of these companies choose to do it because it spreads their reach much quicker than if each and every person who's making a subscription has to take the risk without trying the product or the service. And by doing this, they also increase the stickiness of their service. How am I going to cancel my cell phone family plan when the other family members are counting on me to keep it going? How am I going to cancel my Amazon Prime when someone else is counting on being able to ship? And how am I going to cancel my Netflix when grandma or cousin Eddie or the neighbor down the street that I'm friends with are also depending on the service? In a lot of cases, family and friends even divvy up the cost. So maybe the main account holder has already been paid for that portion of the service. It makes it much harder to cancel. It creates a peer pressure to keep the subscription going. Netflix management should have known that this day would come, the day when they would have to transition. Listen.
We have really significant high penetration of viewers into that near-term market potential. And that was really boosted by sort of this growth at the beginning period of COVID and the lockdown. Now that viewer penetration is made up of two groups. One is a group that's paying us, which is great. And then there's a group of viewers that are not paying us and they're sharing someone else's account credential. And we really see that second group as a tremendous opportunity because they're clearly well qualified. They have everything they need to do to get to Netflix. They know what the service is. They found titles that they want to watch. And so now our job is really to better translate that viewing and the value that those consumers are getting into revenue. And the principal way we've got of going after that is asking our members to pay a bit more to share the service with folks outside their home. So if you've got a sister, let's say, that's living in a different city, you want to share Netflix with her, that's great. We're not trying to shut down that sharing, but we're going to ask you to pay a bit more to be able to share with her. And so that she gets the benefit and the value of the service, but we also get the revenue associated with that viewing.
Throughout the earnings call, what blew my mind is they kept throwing out this 100 million shared accounts number over and over. In one case, I don't know if it was accidental, one of them says over 100 million shared accounts. But I'd like to take a couple minutes and really dig into this idea. Let me set this up. They have around 220 million paid subscribers. Experts estimate that the total addressable market globally for streaming services like Netflix is 800 million subscribers. 800 million total potential subscribers, and Netflix already has 220 paid subscriber accounts. Doing some rough math, you would look at this and say, well, that's only 27%. Netflix has a long way to go before they've reached saturation, right? But that 220 million is the paid accounts. They're saying on the earnings call that there's 100 million more who are not paying. They're just viewing. And to that, I say, wrong. I don't buy it. I don't think they're telling you even close to the right number. And I don't know if it's on purpose or they truly don't know. In either case, this gives me concern. Why do I say that it's wrong? 2 reasons. Number 1 is real life. Number 2 is math. Let's dig into it. First, let me ask you, if you use Netflix, how many households use your Netflix account? Whether you're the main account holder or a moocher that's borrowing off somebody else's login and password, in either case, how many households, how many separate family groups, people living in different locations are using that same account? I'd love to hear your answers in the comments below. I know on mine, it's 3. It used to be 4. It could very easily still be 4, but it's 3 at this point. In our situation, 2 of the families that used to be on the account have kids who will be going off to college soon. So I could easily see a situation where 4 or 5 years from now, we would have had 7, 8, or even 9 different households using the same one paid account. So how many households are on your account? So since the earnings call, just because I was fired up, I went around asking everyone, people at work, people at home, family members, how many different households are using the same Netflix account that you use? Most people will answer, just my family. And if you're talking to them, look at them and just say, just your family that lives at your house? And just let them think about it. In almost every situation, they will start to fill in the blanks and they'll say, well, wait, but yeah, my grandmother uses it, and my sister that lives on the other side of the neighborhood, and oh yeah, and then I think there's a friend that got the password too. And before you know it, they've filled in all kinds of other household information that they didn't realize at the beginning. The most common is adults who have grown children where the children have kind of inherited a shared account, even though they don't live at home anymore. So in my real life questioning, I found very few people who truly had one household using one paid account. The average was over 3. It was 3.4 households per paid account. Now that's not scientific. That's not a large enough number of people that I asked to be statistically relevant or anything like that. But let me ask you, does that sound like a realistic number to you, to be a little over 3? Now let's go back to what Netflix management said and do some math. They said there were 220 paid accounts and 100 million shared accounts. That means that there are 320 households using 220 paid accounts. 320 divided by 220 means that for every paid account, 1.45 households would be using that account. That's what Netflix management believes, or at least what they're saying on the earnings call. Does that sound reasonable? Does that sound even close? I just told you that my straw poll of people I knew came out to an average of 3.4. But maybe you think that's too high, that's too aggressive, Jeff. Let's round it down to 3. In that case, suddenly that brings the total number of households actually viewing Netflix from 320 known households to something more like 660 million out of 800 million potential households. Do you see now why Netflix may be having a hard time growing their subscriber base? It sounds to me like everyone who wants it is already watching it. Now you may look at my math and say, yeah, but Jeff, there are so many single household accounts out there. How could we know for sure that the management isn't right? That it's not more like an average of 1.45 households per paid account? Well, think about this. If there is one account that's shared by two households, it doesn't take one solo account to balance out to Netflix's claim of 1.45 average. It would take more than two single household accounts to get down to that average. For every shared household above that, it gets exponentially larger. For example, to make up for just one account that's shared across 6 households, you would actually have to have 10 single household accounts to balance out to that average. So while this might seem like a hard concept to grasp, I'm going to challenge you. Get weird and start asking the people in your life, how many different households, how many different families and friends share the account that you use for Netflix? I think you're going to find, like I did, that it's a whole lot easier to find people answering 3 than you'll find answering 1. So when we think about that math, does it start to make sense why Netflix would be slowing down on subscriber growth? A very high percentage of the people who want to be watching Netflix already are. So until management makes them actually pay, they're not going to. They're not going to sign up and pay voluntarily. And while I enjoy being able to share accounts as a consumer, as a shareholder, I know that management needs to step up and get some value from those shared accounts. The Netflix team actually talks about that they've been thinking about this and working on this for quite some time. Do you remember what Reed said?
So on the 2 parts, we're working on how to monetize sharing. We've been thinking about that for a couple of years, but when we were growing fast, it wasn't the high priority to work on. Now we're working super hard on it.
So now we're working super hard on it. Now we're working super hard on it? Man, it's too bad that you didn't already have a solution and you weren't actually making it happen. What he's referring to is a solution that they've already begun rolling out in Chile, Costa Rica, and Peru. They asked users in that area to sign up these smaller accounts, the sub-accounts, give them their own identity, their own username and password, and to pay a smaller fee to keep them being able to watch Netflix. I believe it was $3 per account. So the idea is that some date in the future, they would roll out to other markets like the United States, and they would tell their subscribers beginning next billing cycle or at some given date that beyond that date, the sub-accounts would not be able to access their Netflix account unless they created their own profile and started paying a fee. Now, obviously, no one likes to hear this as a consumer, and there will be some drop-off. But my idea, and I believe what Netflix is considering, would be to offer more tiers of pricing along at the same time with this change. So if you were asked to sign up some sub-accounts, and maybe it's a $3 fee, maybe it's higher, maybe it's lower, but you were able to sign up someone else that's a family member for much cheaper than the full premium price, would you do it? I think I would in my case, especially if they offered a very low cost tier where the sub account is viewing ads to pay for part of their subscription. So my thought would be, if they're willing to offer a $3 price for sub accounts in those other markets, what if they offered Americans, hey, you can have ad free, but it's going to cost a little bit more, maybe $5 a month. But if you'd prefer a lower cost and you're willing to watch ads, we'll give it to you for $1 a month. That makes it so cheap that I would be willing to pay for all of my family members to be able to use that account, and then Netflix can collect the ad revenue on those accounts. Or if some of my family members really don't like ads and they're willing to pay me the difference, I would sign them up for the more expensive tier. So this dovetails right into the other main idea that they're talking about on the earnings call, where they're talking about the price of Netflix. And will Netflix consider going to an ad-supported tier to reduce the prices? This is one of the criticisms that's been leveled against Netflix since earlier this year when they raised prices, but it's gotten deafeningly loud since the earnings call. Personally, I don't think their premium pricing is that high. When you compare to what we used to pay for cable, I believe I could sign up for every subscription service and still be below that threshold. For me to pay $20 a month for premium Netflix with no ads seems like a reasonable price to me. Would I prefer to pay less? Sure, that'd be nice. But at the end of the day, I think it's a reasonable price, and I don't think the others are that much cheaper. But management recognizes, they talk about it on the earnings call, that they understand that it's time to look at offering a lower tiered price that will compete more directly with their competition. Adding a lower tier price level for customers who are willing to watch ads and want to pay less, both on the main account and sub accounts, would help Netflix retain their current client base and also attract those who are maybe very price conscious. For a lot of people, commercials are just not something to even notice. Personally, I watch YouTube more than every other streaming service, and I know there's a way I can pay a small fee and never have to watch ads again. And yet, I've never bothered because ads just don't bother me that much. I just skip them or do something else for the 10 seconds or 30 seconds, however long it's showing. It just doesn't matter to me. And so for those customers, being able to just save on the monthly fees, they may really enjoy being able to keep their Netflix. So after talking about these different ideas, you may be wondering, what's the one problem? It sounds like there are several problems here. Well, let me share this clip with you, and you think about if you can identify what I'm going to say.
So there's a bunch of factors that we're working through. That's why we've deployed the tests that we have. And, frankly, we've been working on this for, about almost 2 years. We about a little bit over a year ago, we started doing some light test launches that we, informed our thinking and helped us build the mechanisms that we're deploying now. We just did the first big country test, but it'll take a while to work this out and to get that balance right. And so just to set your expectations, my belief is that, we're going to go through a year or so of iterating and then deploying all of that so that we get that, sort of that solution globally launched, including markets like the United States.
All right, do you get that? They've been working on a solution for 2 years. And now that it's time to actually make that transition, it's going to be maybe a year or a couple more years. Are you kidding? As a shareholder, I'm not impressed. This doesn't sound like you're working super hard on it. During the earnings interview, they also mentioned this.
As you heard from Greg, we're looking to monetize sharing and kind of meet our members where they are. So you should expect that member numbers or subscriber numbers are sort of less relevant over time because it may and very likely show up in ARMs. So you should think about it as engagement and average revenue per member, probably increasingly important, and then obviously revenue growth, which we've always said we're trying to optimize both near and long-term revenue growth to drive that positive flywheel of reinvestment in the business.
Did you understand what he was saying as he was talking through all those different terms and ideas? He's saying in a very weak and muddled way, don't look at the subscribers growth anymore, guys. Like, that's not going to be a very clear way of seeing our growth, and you need to start looking at the revenue. They've got to do a better job of messaging and communicating about their earnings and their revenue and their average revenue per customer. We know they raised prices. Money is a great thing to report, but it gets lost in the messaging. He goes on to say, and I'm not going to bother playing it, but he says that the sub accounts will not count as subscriber accounts, and so the subscriber numbers will be less distinctive, muddying the waters even more. As a shareholder, as an investor, I want to know, what are those sub account numbers? Add that into your data that you're reporting in the future. Then I'm going to share one last clip with you where Reed is answering, specifically talking about the future of the ad-supported pricing tiers.
That, Greg's done great work on the price spread. And one way to increase the price spread is advertising on low-end plans and to have lower prices with advertising. And those who have followed Netflix know that I've been against the complexity of advertising and a big fan of the simplicity of subscription. But as much as I'm a fan of that, I'm a bigger fan of consumer choice. And allowing consumers who would like to have a lower price and are advertising tolerant get what they want makes a lot of sense. So that's something we're looking at now. We're trying to figure out over the next year or two.
The next year or two, again, with a year or two, do you see what I'm getting at? As a shareholder, you're telling me that you have a solution and you just might get to it, maybe sort of, in a year or two. And that's the problem. I'm baffled how management doesn't seem to have a clear path and a clear communication on how they're going to transition. I don't believe that management has a true grasp on the number of shared accounts that are out there. I think they're hesitant and they're kind of straddling the fence, waffling around. Maybe they don't agree with each other on the clear path forward, but they've got to figure it out. So what's the answer? What's my answer now? Am I buying more or am I selling my Netflix? Well, I believe in Netflix as a company and I believe in the business model. As a shareholder, I'm frustrated with management, but I do see that they have the right ideas. I just need them to step up and execute. I work for a software company, and I know Netflix is a much bigger company, but for goodness sakes, does it take 4 years to transition from an idea to actually implementing shared accounts being a thing globally? Is it really going to take that long? I have a feeling if someone at the top was really driven to do this ad-supported pricing, they could turn it on probably within a month. Why is it going to take another year or two and maybe? Why are we saying maybe over and over during the earnings call? So I haven't sold any Netflix, but I haven't bought any more either. Even at this huge discount where it's trading 72% lower than its all-time high. Before earnings, I decided I was going to buy 5 more shares before earnings and then 5 more after. And I haven't done that yet. And I may not, or I may. In this particular case, it's not about stock price for me anymore. I'm not just watching the stock price chart. I'm watching management. I want to see them take leadership and execute. I want to see them communicate a clear vision so that their investors can believe in the future of their company. So I'm not in a rush. I still see huge potential on the horizon for Netflix. I'm giving them the benefit of the doubt for now, and I'm still hoping that they rise up and take action, hopefully sooner rather than later, or in a year or two, maybe. If you made it all the way to the end of the video, you must have liked it. Give me a thumbs up and consider subscribing. Until next time, have a great day.